Are you someone who's renting right now and you're trying to work out what's the better option for you financially? Should you take the plunge and buy your own home, or should you instead continue to rent but invest in property? Well, if so, I really hope this video will give you some clarity. Hi, my name's Nero from Investment Rise, and over the last few months, I've had a number of people reach out to me asking, Nero, we've got some savings. We're renting right now, but we're just not sure what the best option is for us. Our parents are telling us that renting is dead money and we should buy our own home. Maybe it's your wife or your husband who's telling you to go down that path. And maybe you're trying to work out, well, yes, buying your own home can give you that emotional security of having your own home, but what's the best option for you financially? And that's really what I want to go through in this video. And the best way for me to give you the full picture and to really show you which option could be right for you is to give you a hypothetical example. So in this example, it's just general example here, so it may not be particular to your situation, but I really hope it'll give you some clarity. So let's assume you have $100,000 saved up right now, okay? And you're trying to work out, well, we've got some savings, do we buy our own home or do we invest? Now, let's say you're going to buy your own home and you might be looking to buy a property at around about, say, $800,000, okay? So price equals $800,000. Now, let's ignore stamp duty and legals for this example, just to keep the numbers easy, all right? So what that means is if you're going to use $100,000 for your as a deposit, and you buy something for $800,000, your loan, L for loan, is going to be $700,000, okay? Which therefore means that, let's assume with interest rates right now at record levels, let's assume an interest rate of about 4%. That means your monthly payments, more than likely because you're going to be taking a principal and interest loan because you want to pay off that loan, okay? Your repayments, and I've worked that out for you already, will be $3,373.42 per month, or on an annual basis, it will be $40,481.07. That's what it will cost you to get this home in this particular situation. Mind you, that $40,481 is after tax dollars. So depending on what your tax rate is, you may have to earn anywhere from $60,000 to $70,000 just to pay the mortgage and keep your roof over your heads. Okay, so that's option one. And mind you, more than likely, if you use all of your deposit, and in this situation, you're not going to be able to then do anything else in terms of investing for quite some time, talking several years down the track. Now, that may not be an issue for you at this stage because that's what you want to do. But let's look at the alternative, so that way you can compare like with like. Let's say now instead you choose to, rather than buying your home in that particular suburb that you want to live in, you go and rent. All right. Now, in today's market, in 2019, in Sydney, price point of about $800,000, your rent is going to be about, give or take, $650 per week. Okay? Which means per month, that will work out to be, and I've worked that out for you, $2,816 and change, so 67 cents. All right? So that's how much it's going to cost you. Now, mind you, you are living in the same suburb here. So we're talking about, instead of buying, you choose to rent where you want to live. Okay? So now immediately what you can see here is that per month, you're saving about $500 per month. You're saving in terms of actual expenses, right? Plus, obviously, over here, you still have to pay your rates. You've got to pay all the ongoing expenses, any maintenance to do with the property because it's your own home. Over here, you don't have to pay any of that. But I'm not even considering that in this example to make it as simple as possible, okay? So you're saving $500 a month. Now, you might say, yeah, that's great, Nero, but this $2,800 or so, that's dead money. That's going to pay someone else's mortgage, isn't it? Whereas here, at least I'm paying off my own mortgage. Isn't rent money dead money? And it is if this is all you did. If you just rented and then did nothing else with your money and put it in the bank or whatever else, your $100,000, you're right, it would be dead money. However, you do have $100,000. So what you would instead do And obviously it comes down to your borrowing capacity in this situation, okay? But what you would do is you would take the $100,000 and look to invest in property, okay? Now what you could do is you could take the $100,000 and split it into 2 deposits of $50,000. Now again, like I did on this side, to make sure we're being fair to both sides, I'm not taking into account stamp duty, legals, and anything else, okay? So with a $50,000 deposit, you could use each $50,000 deposit to buy a property, P for property, of $500,000, 500K and 500K, okay? So now you've got 2 properties here. Now, of course, then you've got to pay the interest and maybe the loan on those properties. However, there are certainly many areas right now that we're finding investment properties for clients whereby the rent essentially covers the mortgage. But let's just say that doesn't happen for you. Let's just say you buy badly, okay? You buy what I would call a B grade property that costs you around about, say, $150 a month per property, okay? So that means that you buy badly and you're now out of pocket negative $300 per month combined on both properties, okay? So each property costs you $150 a month, which, you know, as I said, it's okay, but you can certainly do better than that. But let's again be conservative. So what have we got here? Well, these 2 properties now costing you $300 per month. However, you were already ahead $500 a month with renting versus buying your own home, okay? So just on a cash flow perspective, you are now ahead 500 less 300 net, you're ahead $200 per month, okay? So from a cash flow perspective, in this scenario, investing in property is certainly going to be better for you than buying your own home, because especially in Sydney right now, there is the most number of properties that are vacant in recorded history. And that's, I think the recording started from back 2005, so before the GFC. Many areas have their highest vacancy rates on record. Rents have dropped in many suburbs of Sydney, $70 a week, $8 a week. What I mean by that is this: that same property today is getting $80 a week less in rent than this time last year. And I expect that to continue for quite some time. So this is really the time of the tenant. As a tenant, you're going to be in control, and I believe that you're going to have a lot more security than you probably did in about 2013, 2014, when really it was all about the landlord, because we had an undersupply of properties at that time. So therefore tenants had to fight for properties, you had to compete with rents being increased on you frequently, whereas now we've gone into an oversupply situation whereby there are more properties available to rent in most areas of Sydney compared to people looking for properties. So you as a tenant have a lot more long-term security. So in this situation, you could certainly choose to rent, buy a couple of properties and be ahead on a cash flow basis. However, what about the capital growth? Okay, now let's just say, for example, you buy this property, $800,000 in Sydney, okay? Now, we know over the last couple of years, prices have dropped significantly in the Sydney market and in Melbourne as well. We expect those price drops to reduce, and some areas will go flat, some areas will turn around, and it's all going to depend on which suburb you buy in. I expect that some suburbs at the top end of Sydney will continue to really do well. For example, over the last 12 months, the best performing suburb in Sydney was Vaucluse with a median price point of $6 million, okay? So that's not what we're talking about. If we're talking about those suburbs with a price point of sort of under $1.5 million, I think you'll find that most of them will, some of them will drop over the next maybe 18 months and recover a bit, but essentially between now and the next 3 to 5 years, I'm not expecting a lot of price growth, okay? The best case reports we've seen is about 5% price growth total over the next 3 years. And that's across all of Sydney. As I said, I think that's because they're taking into account the top end suburbs, which are going to do very well compared to the mid-range suburbs. So it's going to really depend on what you're looking for. However, let's just say, for example, that the prices that today, they don't drop any further, or if they do, they come back up, so that the price today that you pay for in Sydney is going to be the same as it is in 3 years' time, 5 years' time. All right. So therefore, we're essentially going to say today no capital growth in your home in Sydney. All right. However, there are certainly many areas outside of Sydney and outside of Melbourne where prices are expected to rise 14%, 20%. I'm finding areas where I expect many of my clients will get a lot more than that in terms of capital growth. But let's just be very conservative here and say that you get 10% growth on your two properties. Now, you've got a total portfolio here of 2 times 500,000, which is $1 million, okay? So $1 million at 10% growth, that's $100,000 in capital growth that you get per year for as long as this next sort of boom phase occurs in these growing markets. All right. So what does that allow you to do? Well, it allows you to do a couple of things. Number one, if you choose to rent and invest, you allow yourself to be able to maybe come back in a few years' time, sell your investment properties and come back and buy your own home, but with a much smaller mortgage. That was one of the strategies I employed when I first started investing. I continued to rent. I bought a number of investment properties, and then I came back and bought my own home with a much smaller mortgage. Or you might choose instead to take the money that you make from your investment properties and go buy a different home, a bigger home, a home in a different suburb that may be priced at a higher price, where maybe you can't afford it today because you only have $100,000 in savings versus all the capital gain that you could have if you choose to invest. All right. So ultimately, the situation comes down to what is more important to you. Do you want the emotional security of having your own home today, regardless of the fact that it'll probably cost you financially over the next few years because you can't choose to invest, you're going to be weighed down by a significant mortgage? And look, I understand that reasoning, and that certainly is one option. Or the second option is you go, look, no, I'm happy to keep renting for a few years as long as I can then use my money, put it somewhere where it's going to work harder for me rather than keeping it at the bank, where it's not doing anything for you. That's really the two choices. Now, for many people who are saying, look, Nero, I want to buy a home, but I can only afford something $800,000. My dream home is $1 million, $1.2 million. The strategy to then buy an investment property or a couple of investment properties is certainly going to help you, as long as, this is the caveat, as long as you choose the right markets to invest in, because you want to invest in markets that will grow faster than the area you're looking to buy in. Okay, because let's just say, for example, you want to buy your own home in and it's say $1.2 million, for example. Great. If you go buy an investment property, say a unit in that area or whatever else, priced at $650,000 or $700,000, you've bought a property in the same area that you want to live in. You can't bridge the gap. What I mean by that is this: if your dream home's here and your investment property is priced in the same suburb, they'll both grow or fall together. You're not going to be able to bridge this gap. What you need to know is that if your dream home is here and you can't afford it right now, you want to invest first, which makes a lot of sense, you need to find suburbs that are going to grow faster than the area where you want to ultimately live in, so you can bridge this gap. All right. So I really hope this video helps clarify whether you should be looking to buy your own home or look to invest while renting. I think in 2019 and 2020 and probably 2021, you're really in the time of the tenant. You're going to have a lot of long-term security as a tenant. So it certainly is going to make a lot more financial sense for you to be able to look to invest. However, you do need to make that decision that you're willing to sacrifice for the next few years and maybe not get that home right now in order to get a better home in the future, in order to get ahead financially in the future as well. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a free half-hour phone consult with me personally. Either way, thanks again for watching.